Today, I am in beautiful Corte Madera, California, up in Marin County, and I am so happy to be up here. This is my happy place, guys. Like, I have been dreaming about coming here for the last 2 years since the last time I was here, because I just absolutely love this area. It's like 71 degrees, nothing but sunshine out here. The weather is perfect, and you should have seen the level of fog that we had to drive through yesterday to get here. In San Francisco and crossing over the Golden Gate Bridge. I've been up here several times, guys. That was the most fog I've ever seen, like driving through this area. And it was just unbelievable, the amount of fog. And the funny thing is, you don't really get that fog over here. You get it all the way over by the Golden Gate Bridge in San Francisco. And once you pass through Sausalito, you really don't have that much fog. This is like a nice little protected area here. And it's just gorgeous. I love it. Very happy to be here. I have some really interesting housing market news to share with you guys, because the housing market is in such bad shape right now that they're literally giving away free money, okay? We saw Rocket Mortgage a couple months ago come out with a program where they're giving people 1% down mortgages, okay? Well, Wells Fargo just jumped on that bandwagon to the tune that they're going to be giving eligible buyers $10,000 of free money to help people purchase homes. And basically, this is going to be available to people that have a combined 120% or less of the area's median income. And the grant funds can only be used towards the down payment on a Wells Fargo fixed conventional loan secured by a property that will be the purchaser's primary residence. So no fun and games, no investment properties, no Airbnbs, only if you're going to live in the property. But we all know that people can skirt their way around that and take advantage of these sorts of things very easily. You know, fraud is rampant, and good luck with that, right? Good luck enforcing that one, Wells Fargo. But to be honest, Wells Fargo probably doesn't even care, because they just want people to sign on the dotted line, because that's how they make money, guys. And this is just the latest installment of that. And of course, one of the things they're saying is one of the biggest barriers of home ownership is coming up with a down payment. So heaven forbid somebody would actually have to be financially responsible and save enough money in order to buy a home. That would be awful, wouldn't it? What kind of country would we be living in if that were to be the case? And on top of that, eligible buyers can combine the bank's grant with other programs, including the Wells Fargo's Dream Plan Home Mortgage and/or Closing Cost Credit. For eligible borrowers at or below 80% of the area's median income, the mortgage program allows a 3% down payment on a fixed rate mortgage, and the closing cost credit program provides up to $5,000 to use towards closing costs, meaning you don't pretty much have to pay for anything. Wells Fargo is just going to front the bill because you're poor, and somehow that's going to be a good idea, guys. Think about how ridiculous this is. And it's just unbelievable, because if people are in that bad a shape financially, then clearly they don't have the money to become a homeowner. And it's not even that maybe they don't want to be a homeowner, it's just that they're not ready yet, right? Maybe they're not at the right stage in life, they don't make enough income yet, and that's why they don't have the down payment and all of this. So what happens when that person who actually qualifies for this program gets into the property and the first hiccup comes along? You know, that's exactly what Scott Walters and I were talking about the other day in our video, guys. Like, people think that they can just jump into becoming a homeowner and there's going to be nothing extra to pay for, and that couldn't be further from the truth. But yet, all Wells Fargo cares about, all Rocket Mortgage cares about, is getting you to sign on the dotted line, so that way they can collect your origination fee, they can collect the different closing costs from you that are probably going to be paid for by the government, meaning all of us taxpayers, and they walk away rich while you end up house poor and end up losing that house if you can't float the bill every single month. Now you literally have Rocket Mortgage, United Wholesale Mortgage, Guild Mortgage, all offering 1% down, and then you have Wells Fargo now pretty much offering you a free down payment and free closing costs and free everything, guys. They might as well just give you the house for free while they're at it, because that's about as far as they're trying to go with all of this. But you have to realize that the moment that you stop paying, the moment that these people get in trouble, it's over. you're going to lose the house and it's going to go to somebody else who's much more financially fit that can actually afford that house. And they're probably going to get it for a significant discount than what you're going to pay for it as well. And honestly, guys, the part that bothers me the most about all of this is they target underserved communities or low-income communities, right? Because they're trying to say that home ownership is the key to wealth in the future. These people are locked out of the housing market because they don't have wealth. So we're trying to look like the good guys here and give them a leg up. But it's just like all these people that win the lottery, right? More than half of them end up broke. You know why? Because you can give people hundreds of millions of dollars, but if they don't have a financial education and they don't know how to manage their money and make the dollar stretch, they're going to lose it all. And many times that's exactly what happens, and that's exactly what's going to happen with all these people that they're going to be trying to get into free houses with. And everybody thought Wells Fargo was pulling out of the mortgage industry, and it seemed like they were for a while there, because Wells Fargo's mortgage originations were down 77% year over year as of the second quarter of 2023. However, their mortgage originations are actually up 18% from the prior quarter. So it seems like maybe they're trying to get back in on the game because they're seeing how housing prices are still extremely high and they can benefit from this, guys. So all these companies make it look like they're doing this to benefit you and help the little guy that doesn't have the down payment, but in reality, it's for their bottom line, okay? And if you think for a minute that it isn't, you're just fooling yourself, because they're starting to see their revenue go down from their mortgage lending. Because in the second quarter of this year, Wells Fargo recorded $847 million in revenue related to their home lending business. That's a decrease from $863 million in the prior quarter. And last year, a year ago, it was $972 million. So these guys are looking for ways to start filling that back up again because they want to keep the money coming in. They're starting to realize that financial hit and saying, hey, what are we doing? Why are we dropping out of this? We need to get back in the game because there's still more people to take advantage of here. Oh, we can take advantage of people that have a low income and make it look like we're the heroes. And really, the other problem with all of this, guys, is it's another form of propping up the housing market, right? When you have all these programs available, what it does is it helps people buy homes that actually shouldn't be able to buy homes, and it helps keep this crazy housing market train moving forward just a little bit further, okay? It kicks the can a little bit further down the road of when we might see prices start to come down substantially because of more inventory and all of this, because it increases the pool of available buyers. However, my suspicion is that most of these people that these loan programs are targeted at won't even be able to qualify to buy a home anyways because their income's too low, okay? So they can give them a free $10,000 down payment, but if they only make 40 grand a year and they're trying to buy a $300,000 house, it's not gonna happen. So I'm not really sure how successful something like this is really going to be. This house, they are asking almost $4 million at 3.995, but check out the price history of this place, people. They've been trying to sell this place since August last year of 2022. They started off asking $5.2 million. They are now down to 3.9. That is a massive discount for anybody looking to buy a house like this and they still can't sell it. I wonder what the true value here really is. My guess, maybe somewhere around 3 million. I don't really know, but that is unbelievable that they tried listing it for 5. They're down to 4, still no takers. Lots of housing market stories and news for you today. The latest Redfin data is in, okay? And I've been waiting for this to come out because it proves exactly what I've been telling you guys is going to happen, guys. Now, I understand and I realize that the housing market is seasonal, and I have said that and admitted that dozens of times here on the channel. Now look at this. Latest Redfin data is in and prices are starting to go back down. As of July 2023, I have been saying for the last couple of months that the home buying season is over, the party is over when it comes to home prices going back up, and now we have median home prices starting to slip again. Now, this does follow the seasonal trend. This happens every single year, but when this continues to slip, and it will throughout the rest of the year, that home prices are going to end this year lower than they did last year, guys. And I know people want to see a huge housing crash and all of this, and nobody can really say how severe that's going to be or the timing of all of that. We know it's going to coincide with an economic downturn combined with more inventory. But what we can see happening right now is even with the record low inventory that we have, that our median home prices are starting to slip as of July already, okay? And when you see what happened last year, you can see on this graph that that's when they started to slip last year, and they continued to go down until about the beginning of this year. So we're gonna see if once and for all in January of 2024, if that's what we're gonna see again. At these prices and these interest rates, if we still have 7.5% rates by next January, then we might not see the uptick again next year. But that remains to be seen. And this is just something that I've been telling you guys is going to happen, that we're going to see the prices come down. And that's exactly what we're starting to see now. And it's going to continue like that for the rest of the year. So if you are a home buyer, somebody that's been interested in buying, these next few months are going to be very favorable to you guys. Like right between now and January next year could be a good time to buy if you know your market and you see prices come down substantially enough, because according to Redfin, prices came down 12% from the peak of the housing market in June or July of 2022 to the very bottom of about December the same year. So you could see another 10-12% drop again this year, which helps you out substantially when you have 7.5% interest rates. And here's another thing to consider that most people never talk about, and I heard Graham Stephan say this on his most recent video, which is a very good point. And he said that even if home prices continue to go up, which clearly they're not, because we're seeing this right here in the Redfin data, but even if they did, guys, right now home prices are still up 1.8% year over year, according to Redfin, when you compare it to July of 2022. And when you look at the National Association of Realtors, it's up 2% as of June's data of 2022. But we just got the recent CPI numbers a week or two ago at 3.2%. And when you factor in inflation, even when you have home prices going up 1 or 2%, if it's up that much year over year, the inflation is still taking a bigger chunk out of that. And even though in nominal values, in dollars, you're seeing the home prices higher because of inflation, the real value of your home is actually down. And that is a very good point, and it's a very important thing that people need to keep in mind when looking at home values. And it's not just big lenders that are desperate for business. You know, you have also local mortgage companies that are desperate to make deals too, guys. And I'm always sharing with you these email stories that I keep getting from this company called Fairway Mortgage, okay? They're in Florida. And here's what the recent one says, okay? Tip of the week. We have a new FHA down payment assistance program. Buyers can get the entire 3.5% FHA down payment as either a repayable or forgivable second mortgage. The best part is that the repayable option has no income limit. Some more details. You can have as low as a 600 credit score. You do not need to be a first-time home buyer. No minimum out of pocket for the buyer. You can have the seller pay all of the closing costs, up to 6% of the purchase price, and use the 3.5% assistance to cover the entire down payment. There is even an option for a 5% second, where the additional 1.5% can go toward closing costs. This loan can even be used for a duplex. Reach out to your loan originator today for more details, and reach out to your buyers and get them excited, realtors. So let's break this down for a minute, because this just reeks of desperation, right? These guys are trying to get more people that have no money into buying a home at the peak of the housing market. And if that sounds familiar, oh, wait a minute, when did that happen again? Yeah, 2007, 2008, they were doing the same thing to people, giving people ninja loans that couldn't afford homes. Now, this is not quite as crazy as that, and people do have to be vetted financially as far as having the income to make the mortgage payments and all of this. But keep in mind, guys, these people that are qualifying for these 3.5% down payments, okay, you can have as low as a 600 credit score. That's not a good credit score. Having a 600 credit score is pretty bad. And that's the minimum that you need to qualify for this. And then the fact that they're giving people the down payment for free, forget about Rocket Mortgage. Those guys want 1%. I can go with Fairway Mortgage and get into FHA loan for 0% down, guys. When has this ever existed before? I have never seen this until now. I just cannot say how much that this bothers me, because they're saddling people up that can't afford to pay back this debt with a tremendous amount of debt. And I think they're pretty well aware that they probably won't be able to pay it back, because even though their underwriting standards say that they will, the reality is people who are not in good shape financially and don't have a good track record, like a 600 credit score, or don't even have $6,000-7,000 to put as a down payment on a house, are probably not going to be your best bet on collecting a debt payment from them in the future, especially in the case of a job loss or an unexpected medical expense or anything that might come up for them that makes it hard for them to make their payments. And it's not even that they're giving people basically 0% down, but they're even offering to cover the closing costs, okay? Up to 6% of the purchase price. So they're trying to get people in, no money down, okay? You're coming into buying a house with no money down. Think about this. Buying a house right now is more expensive basically everywhere than it is to rent. But if you go to rent and you try to be responsible right now and save that $500 a month on renting rather than buying, you think your landlord's gonna let you move into the property with zero money down? You think they're gonna say, yeah, come on in. We're gonna give you first month's rent for free, the last month's rent for free, and don't worry about the security deposit. We'll take your word for it that you're gonna pay, and you're not gonna destroy our place. That's what these banks are doing. That's the equivalent of a landlord saying something like that. And you can realize how absurd that sounds. And that's why these programs are unbelievable. They are just unbelievably ridiculous. And I guess one last point to kind of back up why you're seeing this happen right now is because the housing market activity is just so extremely slow, okay? You have a report from the National Association of Home Builders. Their housing market index went down 10.7% in August. And what this means is it pretty much measures the amount of foot traffic, the amount of leads, the amount of people who are inquiring about buying a brand new home. And it is down 10.7% right now. And this is really insane because brand new homes are actually a better deal in many cases today than buying a resale home because of all the incentives that home builders will give you in terms of free upgrades to the house, in terms of mortgage rate buy downs, in terms of a discount on the actual purchase price. These guys are jumping through hoops to get you to buy the house, and their activity is still down 10.7%. And if you take a look at this chart of this same index since 1985, guys, that's a long time ago. There's only 2 times since then that it has been this low. One was in the housing market crash, 2008. It was down to 8, okay? Today the number sits at 34, but was down to 20 recently. And back in 1993, it was down to 16. So we've only had a couple periods like this in the past 37 years, essentially, which is kind of crazy when you think about it. The home builders are now saying that their foot traffic and level of activity is associated with levels that we typically don't see unless we're in a recession. But we're hearing all this talk and all this narrative of how we're going to basically dodge this recession and we're going to hit this soft landing and it's all going to be okay. And here's the thing. You say, well, Michael, this index shows that it's actually higher today than it was earlier this year, because earlier this year it was down to 20 and now the number's at 34. Well, home builders are saying the reason for that is because we did see mortgage rates come down for a little while earlier this year, which we did see. It came down in the mid-6s, and they also had prices on lumber coming down that they were actually able to pass on to the smaller homes that they built to new home buyers. So you can see these home builders are doing anything and everything they can to get people into these houses, guys, because they're not in the business of building empty houses and letting them just sit there. So that's what I'm saying. Even though home builders are able to give the best deal in town right now, they are still seeing a depression in terms of how many people are coming through the door to buy a new home right now. And that should be a huge warning sign for anybody who's considering one of these programs we were talking about earlier. If you're somebody who's low income and you say, well, this is great, I can get into a free home, I'm not going to sit here and talk you out of it, because if you think you're going to have the financial wherewithal to be able to buy that house and get in with these 0% FHA programs or whatever other shenanigans they're offering, then go for it, guys. But don't come crying to me if you end up losing the house because property taxes go up, or your homeowner's insurance goes up, or you have to get a new roof by surprise, or you need to get a new air conditioner by surprise, or the thousands of other things that can come up as a homeowner that you don't have to deal with as a renter. So if you're someone who's considering taking on one of these deals, all I'm here to do, guys, is caution you against it. I'm not telling you for sure don't do it. I'm not telling you you should do it. I'm just telling you that if you are going to do it, then you need to be fully aware of what you're going to be facing. And the reality is, you can ask anybody who's a current homeowner, including myself, expenses only go up. They never go down, okay? Unless you pay off your mortgage and you don't have that mortgage payment anymore, you can have your expenses come down, but that's about it. The other thing is, the less money you put down, in this case 0% with all these programs, you're going to pay PMI, which is private mortgage insurance, which is going to cost you extra each month, and you're going to have no equity in the house, okay? So if your home value starts to go down and something does happen and you kind of have buyer's remorse and you regret your decision, or maybe that's not even the case, you just can't afford it anymore, like some of the people we talked about in LA that are selling who bought in 2020 or 2021, if that happens to you and you need to get out of that property, you're not going to be able to get out without either short selling it or potentially even losing it to foreclosure in this environment right now. Because I showed you guys, you see that the home prices are already coming down as of right now, according to Redfin. And this data lags, okay? That's of July, guys. We're already halfway through August. So you're going to keep seeing that number go down throughout the rest of this year. So if you're somebody who's going to take advantage of one of these programs today, realize that your home is going to be underwater literally like a month or two after you buy it. And when you factor in inflation, actually it's going to be down by quite a bit. If you guys enjoyed this video, please make sure you subscribe to the channel. I'm really looking forward to sharing all these Marin County videos with you. And if you don't want to wait for my next one to come out, check out this one on the screen right over here, and I'll see you in the next one.